I remember getting pulled out day 3 of onboarding. Literally was like, here's your email signature. Casey, your onboarding's over. Let's go. Adam wants to regionalize all the P&Ls by Monday, and it's Wednesday. I'm like, that generally takes about 3 to 4 months. He's like, yeah, you got Monday. Adam and the gang taught me, and when you press someone, you'd be surprised when you said you couldn't do something, what you actually did. I learned the most incredible experience where someone paid you billions of dollars to grow faster than any other company physically has ever done. That type of tuition you don't get at business school. And I take that, and it's made operating at any bit of a slower business way easier.
Welcome to Turpentine Finance, a podcast where we talk with top founders and finance leaders about what it takes to architect success. Our guests speak candidly about big business inflections, market curveballs, and how they approach decision-making so that you have the tactics and mental models for when the pressure is on. I'm your host, Sasha Orloff, founder, CEO, and self-professed finance nerd. You ready? Let's dive in. All right, we're in for a special treat today because we're talking with the one and only Casey Wu. This is going to be a fun one. And I definitely want to dive into some of the WeWork stories where you were a global head of strategic finance. But Casey's also a founder, a serial CFO, investor, and an outspoken advocate of CFOs everywhere. So this is going to be fun. Welcome to the show, Casey.
Thanks for having me, Sasha. Be careful what you ask for, okay? You might just get it.
All right. So you go to undergrad, quote, in the Boston area, and you do what most people from the Boston area do. You move to New York and you become an investment banker, and then you go work at a hedge fund. All right. So for those of us that don't go to school in Boston and move to New York, because I grew up in California, in the startup scene, what is life like as a banker? Because all I think about is work every hour of the waking day, cocaine, alcohol, and Microsoft Excel. How close am I?
For me, that was exactly spot on, minus the cocaine. All that fun stuff, Wolf of Wall Street stuff. I look at it, I'm like, where was that? One, it is an incredible training ground. Investment banking, I owe half my groomsmen to, my wife. Looking back, it's one of the very few places to properly hardcore train on financial modeling, valuation, and what I would call the fundamentals of corporate finance. In a semi-applicable way, because you're still advising. But yeah, it's an amazing experience, and it is 90 to, I remember peaking at 120 hours and wanting to break. And it's also very much like the military, which is where I was right before Boston. So in that sense, I run a lot of parallels. It's endurance, it's a team sport, and you got to be a little extreme. So yeah, but it was great.
What do you do? Like, what are you specifically doing? What are you modeling?
General industrials and like media. There's many things investment bankers do, but one is essentially support companies to capital raise. And so in doing so, there's a lot of storytelling, pitch decks, pitching to the customer to win the business. Once you get the business, pitching them to get sold or pitching for an IPO. And so it's fun because I'm on the other side now of this, but it all makes sense now, 22 years later. But basically, you are trying to lay out through data, storytelling, stats, competition, other logos, triangulation. It's a really good mix of business, finance, and trends and market. And you get trained on that. The other part is a lot of hard skills. All you do is model. The real value of banking is repetition. And then what happens is you get so good at financial modeling of all sorts that becomes a real hard skill set that you take, with you everywhere.
So when you're in this, you gain the perspective, you're modeling, you're understanding the business, you're understanding the landscape. How much of it is the story following the numbers or the numbers following the story?
Yeah, great question. I think that's what investment banking will teach you is if you work with a really good senior, they lead with the story. Financial is just the translation of business into numbers, but business is what leads it. A lot of people just spreadsheet. All they think about is numbers. No, that's just a tool.
You're learning a lot of the hardcore skills about how to do modeling, right? You're on that side of the table. You're probably not telling the story anymore. You're listening to the story. You're helping build a story, maybe a little bit on the IPO, but then you transition. You actually come into a finance team. You become on the other side of the table, Novus, Pantheon, Zozi. What is it that prepared you in banking? Walk me through the first couple 90 days.
Let me back up. It's not just spreadsheet financial model. The other ones are going to be business decisions. I'll just say it loosely. When you're sitting there as an analyst, listening to the MD talk to a CEO or founder, and it's the dynamics of competition. The other one's valuation. So you start to learn valuation work. We call it football tables or comp tables or precedent transactions. You start to get this concept of, oh, these multiples are a DCF. What's a DCF? A business is basically a stream of cash flows discounted, and a multiple is just a proxy of that. So you start to really get a lot of training on that. That's when you go into as a CFO. That starts to help a lot. Number one, raising money, because you're on the other side of the table. So literally you were pitching, now you're, pitching on a different way. And that's one. The other is, I think what's really important, what drives value. My next job was investor. It's very common. Banker becomes private equity or hedge fund, which we call sell side, move to buy side. And then operating side, right? Corporate side.
What makes you decide to take the plunge and come into operating side?
I wasn't fulfilled as a hedge fund investor. There's nothing wrong with that profession. It's obviously has a lot of sex appeal and amazing. And have you seen Big Short, the movie? But if you also see Big Short, the movie, I ask people to pause when Michael is in his office. Nice big office. By yourself.
Yeah.
So for me, there's two reasons why I left Wall Street. Number one, I love to build. Auditors, bankers, lawyers, consultants in general are more transacting and advising, unless you're building McKinsey. And I realized, why don't I like it? It was very difficult at the time, but in hindsight, it's because I love to build things. So buying and selling stocks, the only thing I'm trying to build is a thesis. But more importantly, the second thing is with others. I'm a flaming extrovert, right? But so I'm not saying you have to be one, but working with the team, the camaraderie, I think is something I missed greatly. So building with teams is something you do not do as a hedge fund manager. It's called transacting and advising by yourself, right? What is building with teams on steroids? Startups.
Yeah. I guess of all the industries, how do you decide that startups is the right fit? I'm sure there's a lot of people who came from a banking background and see the glamorous part of like operating, or it sounds maybe sexier than it is. How do you get over the mindset of coming from Wall Street and a hedge fund where the general association is it's money and that's the primary value driver? How do you decide that you're stepping into a company for the experience or the community or the friend? How do you value that? How do you even think about that?
That's such a great question. Yes, I think because I was in the business of money and it didn't fulfill me, that told me in of itself, there's more. I think everyone knows if building, the challenge, the creative sport, what's that worth in terms of fulfillment to them? If it's worth a crap ton, you're going to want to do these. You're going to go after these things that are not per se calculated equity, expected probable value. You're going to do it after challenge, the scale, the speed, the craziness, the what the mission is. If you're someone that doesn't care that much about it, well, yeah, then why would you? Don't do that type of stuff. We always joke, there's way more places to make a lot more money, easier and less crazy. It is the crazy, the building, the stimulus, the junkie in us. And I'm looking at one right now. You could make so much money on Wall Street, Sasha. You're so talented. You don't want to do that. We're drawn to the sport. We're like a hunting dog.
Yeah.
We like to hunt. Others are like, why would you like to run so much? That's so, no, we're running. That's just who we are. And so I would say it's your DNA. It's not even like a choice. It's like what makes you happy, listen to your feelings, that type of thing.
How do you, if we take that on from my side as a founder, hiring a CFO, and I'm looking at it as, do I want like a CPA CFO, one that's sort of really buttoned up, or do I want a strategic CFO? And let's say I'm looking to Wall Street. I'm looking for somebody just like Casey Wu, looking for his first job coming into. How do I know whether you're just daydreaming? Like I think about this because the grass is greener versus like this is something you're going to be a rock star at, because I'm getting nervous myself. How do I make a hiring decision? How do I hire the right person?
My biggest little interview trick when interviewing a CFO. So I'll get this question a lot. I'm interviewing a CFO, Casey, which I ask. You literally, after you do your little business model spiel or you talk, you go, do you have any questions for me? And there's two types of personas. Number one, so remind me how big the finance team is. So how are reconciliations done right now? How many board meetings? What do the boards care about? What are our KPIs? What else can finance do? Okay, that's one answer. The second is, so you told me your product's rolling out here. The market's shrinking here. You have a single point of failure there. We got to fundraise in probably 2 years. Are you a bit concerned about X happening? Notice the second answer is all business.
Yeah.
The cool thing about Wall Street training is most of us are trained in business. This is why so many bankers come here. That's why we come in immediately looking at a business model. One of the hedge fund tests is, what's your favorite business model in the world? Is it Costco? Like, what do we know? So, because we're thinking business. So that is the number one thing is, are they thinking business first? I would call it business first, function second, or finance first, finance second, finance third. For a Wall Street person, the second thing you have to ask is, why do you want to leave Wall Street? And you can tell if they say things like, I want to build, you can see they have a craving for crazy. They have a craving for pain. Like they want the challenge so badly. They got money. You're in. If they make it sound like it's just going to be fun, cool, up and to the right, nice, like there's not a lot of friction and understanding of, I want to go to Bud school. They know that is going to be painful, right? But I want to do it for the challenge, like that. So there's grit behind it versus it's cooler.
So what's the advice that you give to those bankers that are transitioning into operating roles? What are maybe some of the key takeaways from Novus, Pantheon, or Zazie?
The number one thing I've learned when you're about to go into a company, especially if it's a senior finance role, the number one thing you have to ask yourself is, do they give a shit about finance? There's two ways to care. Number one is culturally, and the other is business model. Business model at Stripe or Google, no offense, the kings and queens are product engineering and sales. That's what drives it. You think at Google, 86% gross margin or whatever it is, I'm going to make it 87. They're like, cool, man. You know what? Make sure everyone gets paid. The engineers don't leave and keep us out of jail. Cool. So one is just the business model. Are you a first or second class citizen? Sounds kind of dirty, but if you're at Amazon.com, DoorDash, translation, lower gross margin, high complexity, highly operational, you'll probably be very valued. Whether anyone likes it or not, it's a core competency of the actual business. The second is cultural. Does the CEO founder care? Bezos cared. Or Bill Smith was amazing. He valued the finance team and the value it could bring. Immediately you could tell. Okay, that's someone you should work for. The opposite of those, be careful.
What about just thinking of you've now done it a few times. What are some of the first things you want to accomplish as you step into a role?
The first thing is understanding the business / gaining the trust and respect of all your executive peers.
How do you actually do that?
Well, one is you have to go with a lot of humility of like, I don't know this business. These people know it really well. Understand it before you say anything. But the second is, I always ask, how can I help you? What happens and people forget in the CFO role is a lot of people think CFO is coming in. Police force coming in.
Yeah.
So they have this whole thing of like, can I trust or not? That's literally, they're on the fence. You need to break that down real fast. Day one, it's like, this person's going to empower and be my business partner. He's not going to throw me under the bus as CEO, right? We're going to work together. This person's fair. He's an honest broker, but this is actually going to be my like partner in crime as compared to, I got to hide from this person. I got to be careful what I say. So gaining trust is vulnerability. How can I help? And by how can I help is instead of me being a police force, I become a helper. I need to figure this out. I write it down. This person cares about this. Great. Go back and I'm going to go do it. And in a week, I come back and, by the way, let's sit down. Let me try to help you do this. Or I can't help you. Let me get someone else. You immediately show value rather than enforcement.
Hey, we'll get back to the conversation in a moment after a word from our sponsors. There's a world where your CRM is powerful, easily configured, and deeply intuitive. Attio makes that a reality. Attio is a radically new CRM built specifically for the new era of companies. It's flexible, easily configures to your unique data structures, and works for any go-to-market motion from self-serve to sales-led. Attio automatically enriches your contacts, syncs your emails and calendar, lets you create powerful reports, and quickly build Zapier-style automations. The next era of companies deserves more than a one-size-fits-all CRM with an outdated UX. Join 11 Labs, Replicate, Modal, and more. Try Attio instantly at attio.com. That's attio.com. Let's take one more step back and then let's talk specifically about a couple founders. But what's the interview question that you ask to evaluate that a founder or the CEO takes finance seriously? Part of it is a business model. I get that. But there also could be just the culture. What do you ask to evaluate whether or not you're going to come in?
What does success look like for me? What role does finance play in your mind in the business? Right there. I guarantee you'll know. If it's like,
what's a good answer and what's a bad answer? Yeah.
Bad answer, good reporting, good systems, on time, pays all the bills, gives me financial visibility, supports the team. Good. It's my business partner. It's my person who will be the force multiplier to scale the business, whether that's go-to-market operations. I want the finance team to be in every critical function, helping, supporting, and understanding every part of the business. Fundraising, there's strategy behind that. There's a whole, you're incredible at it, right? This is not just, I need money. So a strategic business partner. The answer basically you'll hear is a lot of business stuff versus a lot of finance stuff. If you hear a lot of financy stuff, they just think of it as like a department function, like a cost center.
And last one, let's say you're a CFO and you're in a role and everybody knows how to interview and say the right things to interview. And then you're inside of that job. So you're the CFO, you're inside, you're being told everything in the courting process. Finance is a first-class citizen. We're going to be a business partner. And then every once in a while, I imagine at some point it doesn't happen. What's the advice that you give to CFOs to tell founders how to change the dynamic of their relationship? Or is this just something where you have to leave?
I like that last part you said. I think that is definitely one of the doors you can take. I don't think people like to hear that. So I'll start with the easier one. One of them is to leave. No, that's obviously not the first thing you do. You leave if you start to very much disagree with a lot of decisions being made and you can no longer disagree and commit. So it almost becomes like driving it into the ground, unshared vision, making you do unethical stuff, pressuring you. That's the stuff where it's like, that DNA may not change. I think the other ones are trickier. One way someone has done is they find someone that CEO founder respects who does use strategic finance in a very, amazing way. And there's that. The other is proving it, is coming in one day and saying, can I share you something? And it's some business insight that changes, I would say, change behavior. There's two types of reports. Those that are like, oh, that's good to know. It's like a Guinness Book World Record. That's fun. That's interesting. And then there's like, we need to change pricing. We need to do that. We need to do more of that. We need to stop doing that. The minute you start changing people's behaviors, I call it like Jedi. You go in there and you just start, they're like, need more of that. And all of a sudden, they no longer treat you like finance. They treat you like a business executive.
All right. So as we're talking about it, a lot of the startup world is really fun, but there are some challenges for the finance role. Even if it's a first-class citizen or a second-class citizen, the role is complicated. And part of that complication is the business model and then the founder. So with that, we can't not talk about WeWork. All right. So you're the CFO for Western US and Canada in arguably one of the craziest capital stories that has ever existed. So you're there from 2017, 2020. So let's start painting the picture. SoftBank makes its first major investment in WeWork in 2017 for like 4.4 billion with a B, almost 46 times the size of the average IPO capital raise that year at 95 million with an M. Okay, so you step in, the company is flush with more cash than most IPOs, but it's staying private, meaning, arguably the skeptics would say slightly less oversight. Can you talk to us a little bit about your role at WeWork in this time? What's your core responsibilities and KPI?
Yeah. WeWork is probably one of my most memorable, fun, and yes, I would do it over again chapter. I think I will start with that. I actually think most WeWorkers, 8 out of 10, 9 out of 10 would have done it over again. So that's actually a really fun fact. The role was an exciting one for all you builders out there. It's called, you've gone vertical in terms of expectations. You've been given a green light to grow so fast, so hard. So in that sense, it's trying to build at hyperspeed. So specific role was we were regionalizing. So there was corporate mothership New York. And then all of a sudden there's 7 regions around the world, which is super cool because you have 7 CFOs who are all buddies. But China has a superpower that, we're the same business model, but we have different local. And so it's really cool. I have my Brazilian buddy, we have, so it was really, really fun. But the point is to regionalize and to go to a dotted line, hard line structure, a matrix structure at Mach 8. So I remember getting pulled out day 3 of onboarding. Literally was like, here's your email signature. Casey, your onboarding's over. Let's go. Adam wants to regionalize all the P&Ls by Monday, and it's Wednesday. I'm like, that generally takes about 3 to 4 months. He's like, yeah, you got Monday. I'll stop there. I can keep going. But it was basically 1-minute miles delivered and then we would actually do 2-minute miles. That's really the coolest thing about it is Adam and the gang taught me, and when you press someone, you'd be surprised when you said you couldn't do something, what you actually did. The reason I would do WeWork all over again is because at every point in time when you try to pick another opportunity, you're optimizing for a different thing. Very specifically for that one is I wanted to do large scale. I was at Series A's and B's. I wanted to understand hyperscale. I was tired of people telling me, do you know what growth, like hardcore growth looks like or size? That's it. I'm going to go get that experience. And I got it in spades. Meaning, notice I didn't say, I'm going to go be a billionaire making that. No, that wasn't my goal. So what if it happened or not, great. I think that's one of the major reasons why it was like, this is awesome because I went for a certain reason and I got it. And of course, the people, amazing talent, incredible friends. And then the third is, I learned the most incredible experience where someone paid you billions of dollars to grow faster than any other company physically has ever done. That type of tuition you don't get at business school. And I take that, and it's made operating at any bit of a slower business way easier.
God, there's going so many different directions. I think the part that gets me the most curious. So in February 2019, you become global head of strategic finance. And in August 2019, WeWork files their S1 to go public. And so how do you possibly manage strategic finance in a company that is just growing so fast? The flip side of that, we could also say, is just lighting money on fire, like burning like there's no crazy. How do you do that role successfully?
I think for those operators that have been in, these situations or any high growth VC backed heavy board, the truth of the matter is very few people control everything. Okay, so just think about that. I think about the White House. Our former president, he controls most. Like, that's just what it is. Okay, so you can disagree. I'm going to use the president as an example. Like, you can go and say, hey, build a wall, don't build a wall. Say this, don't say that. It don't matter what you say. At the end, they decide.
Yeah.
So think about it. WeWork had an incredible amount of talent. It drew, which is another reason why we do it all over again. We have so many alumni and friends that would be doing really good work in their own right. We developed models for CapEx that were obviously 90% of the spend. Real estate committee templates that were really guardrailing. Like, it was awesome. Evaluating, the bigger one, I call it the Mueller report, was trying to understand how much money did you make on Facebook? It's an orthogonal P&L. You had to allocate the bathroom, the seats, everything is building wise, not account wise. So there's a lot of amazing work being done, but the biggest decisions in Fulcrum weren't actually those things. It was how much money did you raise at what valuation that generated what type of pressure on the business that overrode everything. Example, double square foot was the mandate. I was like, you mean profit per square foot? They're like, square foot. That overrode every cool analysis, and because it became, Casey, we got to grow, the whole growth at all costs.
Yeah.
So both decision making in a small amount of people, but also an overriding priority overshadowed every other potential thing. So the 95-5 rule happened, and we grew at all costs, and that has costs.
So we're in this like really exciting time. We were in this really exciting time, this blitz scaling mentality, and there was capital available for this. At some point in your mind, I have to imagine you thought about growth versus profitability, or what would it take if capital wasn't available? How do you, what happens when these thoughts happen?
By the way, this goes exactly back to, I think a lot of people may not realize that a lot of these discussions were had. And
Of course.
That, right? I think some people are just like, oh, the whole 15,000 org just like was all going growth at all costs. The powers that be, I think, by the way, I'm like level 2, 3. Okay. I'm not like level 1, right? But the powers that be to me were the orders. Think about the military. The orders were to grow and deal with the profit will come later, which, in some businesses that work. That was the model. And it's more detailed than that. So there was always this, we're going to grow into it or we'll deal with it later. I will say this. I think for the listeners, this is the one that a story of, I'm going to start anonymizing stuff. But basically, if someone comes and says, Casey, you think we're overvalued, right? I'm like, yeah, I think based on once again, investment banking, multiples, growth, DCF, right? We had an investor who just disagreed with you. Because guess what really works or matters? The validation of an actual transaction. So you can say whatever you want a stock price. This stock price just traded at large scale. Okay. So use that framework. You do the math and you say, okay, that money raised will last us 6 months at our burn. It'll provide us 6 months runway, but will take 7 years to grow into that valuation if we kept doubling. Do that exercise every time you have a raise. The runway provided and the length of time at some speed, you determine how much risk that speed is or how unfeasible that is. And all of a sudden you'll see the whole stock market is a weighing game in the long run and a voting machine in the short run. So a lot of votes were being had. And I'm saying that scale is not working anymore. So, but guess what? The transaction happened. So when you ask me growth, yes, discussions were all had. And there's no right or wrong. It's just someone wanted to transact at a much greater implied DCF growth. And someone said yes to it.
How do you, that's gotta be, I mean, on one hand, there's nothing like being inside of a scaling company, regardless of what the outcome is. It's a very rare experience that anybody ever gets to achieve. I imagine similarly for a CFO, there's like this milestone of going from a private to a public company at some point. It's like, it's painful when you're inside of it, but you look back and it's such an amazing accomplishment. When you look back either at your other companies, your experience at WeWork, what's the advice that you give to people? Because on one hand, you said, I do it again. On the other hand, it doesn't look like there was a lot of like shareholder value created at the end to the pref stack and the IPO.
Yeah.
And so how do you balance that as a CFO? How do you think about that?
Look, I would do it again, not obviously for, making a bunch of money on the equity. I would do it again for a lot of really important reasons, career-wise and just personal. Number one is my friends that I made. Anytime you're at a high scaling business like that, the amount of talent you get, like that is priceless, number one.
Yeah.
Number two is the learning. You were given billions of dollars at whatever age I was to build like no other. The amount you could test, experiment, learn, break. There is no book that will ever teach you that. The best operators do. So I always say your LinkedIn is a bunch of tours of duty. That was World War IV. I mean, I've seen more arsenal and tools and weaponry and what works, and I'm so much better as an operator. That's the reasons I do it. And it was fun. Don't get me wrong. Look, we were partying also and working hard, right? Like we were having fun. Okay. Like we work hard, play hard. But the other thing I forgot to talk about is, how does growth versus probability, how does it get sideways? Like just like it does now a lot of times or 2 years ago. If you actually think about stock market, public versus private, the private market that transaction's controlled by probably 3 people sometimes.
Right.
So if those 3 people decide something, the public markets is decided by millions of people. So the efficiency and the liquidity in the public market is way harder. So the other way to think about it is when you're private doing 3-person deals but you're headed public, just know it will get to efficiency. So I always, when I'm always looking at a business, it's shoot it out to efficiency and stabilization, whatever, 10x revenue, whatever, rather than, and then that's just back into it. Because public markets aren't going to be 150 times revenue most of the time. You just kind of know that. So all you got to know is that's where you're going. Are you hitting above or below that? And then you just back into it of what type of growth you need. It's actually not that hard of a map.
All right. Last question about this before we kind of transition over to the next pair. One of the things, if we look back at a lot of your experience, so you're a banker, you're at a hedge fund, you're in an operating role, you're in one of the massive growth opportunities again. And you talk with all this passion about this scaling growth, this like unbelievable experience. Now, as advice to founders who are maybe hiring their first CFO or have one, we've learned lessons, but we've seen a lot of capital can create these great companies that require billions of dollars, like Uber, that have a massive exit. At the same time, there's WeWork, which raised billions of dollars and doesn't have a great exit. So what advice do you give to a founder who is hard charging on the growth curve, given these lessons and the lessons from before? Keep going? Not what do you tell them?
Is the question...
You're the CFO. Sorry, you're the CFO inside of this company. Yeah. Like, are there any lessons learned? What are the takeaways from this experience? Is it go for it? Go for it. Have a backup plan. Like, what's the advice?
Yeah, I had a good discussion over. If we all know there's cycles, why don't we just operate the average of the whole time, like no matter what, and not too low, not too high. And we had a really good discussion. Yeah, exactly. Well, not just that. It's more of a complicated topic, but basically, there are periods of time where capital is cheaper, for example. You have to take that into consideration, meaning if your competitors are also going faster and it's a land grab, so you have to understand the business model. Uber was a land grab. Okay, so the CFO realized that's not finance, that's business. Yeah. So when you move to the business level, you're like, first mover is worth 10x than second. Okay, well then you take the risk. And by the way, Sidecar and Lyft are also raising that. You got to lean a little bit in, right? You got to take a little bit of risk. Now, I think in all things in life is moderation, right? So if you're lean in one standard deviation. The problem is when you lean in 6. So as you lean into a market that's frothy or start backing out when it's not, you don't need to chop 60% of the company, 30, right? So what I'm saying is it really is a navigation, iterative, evolving exercise. I think what happens is there's just people start freaking out and they go 6 standard deviations one way or the other. So the answer is more of a framework. Moderate, but don't do the market's frothy and going, everyone's taking all the customers. CAC is too high. No, our CAC is too, like LTV CAC fell beneath 3.0. Stop selling. No. You got to flow with it. And so, that's the answer. And you need to understand the business model. Some business models, a land grab is not worth it. Right. And so you play that out. You go, okay, let them spend all their money. Right. CAC and LTV is everything. And so you just have to see what the market model is.
That's a good call. Now, just tactically, a couple pieces of advice. Are you, as a CFO, are you building a shadow, like, can't raise model? Like, you have your growth model. Are you just constantly maintaining what if this next capital raise doesn't happen or doesn't happen fast? And even if the founder doesn't want it, are you just building it anyway?
Yes. You build, I generally build an operating case and a sales case. The way I think about it is probabilities. So a lot of people like to use words like base and ups. No, I think a really good way is probability. Operating case, what does that mean, Casey? 90% probability. If we play this out 10 times in parallel lives, I think 9 out of 10 times we would hit that type of revenue, which then flows down to everything, or hit that type of gross margin, and that'll tell you your cash. Sales plan is probably 50%. The problem when you just say one scenario or people think operating is achievable. You don't know what achievable is. So when you lay out a plan, lay out a probability of risk. So what happens is every quarter you evaluate. If you're starting to veer pretty far off, I'd say 30% off a certain plan, you need to make adjustments to get closer to the operating plan.
And so in that case, let's just say everybody's listening. We're all aware of it, though. You've also raised money from incredible funds like Index and Bain and Foundry and Scale. In a place like that, how much of your time are you spending actually fundraising or building relationships to help fund and support the founder? Is this something you're doing? Is this something the founder's doing? Is this something you're doing together?
Obviously it depends on the CEO. For me, I was very heavily involved. With WeWork, I wasn't. I wasn't the CFO. Yeah. So no. What I will say is this. One way to look at it is, are you capital intensive or not? If you're capital intensive, you'll be fundraising like it's your job, like Artie, like literally all day long. And obviously it's growth speed. The second is, are you gaining a lot of traction and doing well or not? I have a good feeling Stripe doesn't need to spend a ton of time fundraising. You just okay. So there's fundraising, and there's the amount of difficulty fundraising in time.
Yeah.
I know one company in particular that was just like literally a 3-hour discussion with someone, and it was term sheet in their inbox, and they're like, I guess we're done. And it was preempted and whatever, right? And then there's the opposite, right? Not gaining traction, off plan. You're going to be fundraising not only for a longer time, but a much more difficult raise. And I've done both. So it just depends on those two things.
So I think that's a good transition. I think one of the themes as we talk about a lot of your career is the different types of roles that a CFO can have. And it depends upon the stage and the sector and a lot of things. So you tell the story about moving from New York, where finance is a first-class everything, to the Bay Area, to the startup world. And that leads to the founding of the Operators Guild. So what is the Operators Guild? And tell us a little bit of the story about how it started.
So when I left Wall Street to Silicon Alley, so it was a 10-person fintech SaaS startup in New York. I loved it. I loved it so much. I'm the type of guy that wants to play up, just get my butt kicked everywhere. So I always joke, you want to learn how to cook, move to France, learn French, and go into a kitchen and just do it. Military, I'm going to get my butt kicked at the academy. Economics, went to Harvard for economics. Okay, get my butt kicked there. Then it was finance, go to New York. Tech, hey, there's this place called Silicon Valley. Okay, so I go with my Wall Street vest. I head over there. It was a rude awakening. This was about 12 years ago. Interviewed at a little company called Stripe. I think they had about 60 people. I begged. I will work for free. I just want to. The general consensus I got is that there's 3 first-class citizens in Silicon Valley 12 years ago. Number 1, the people who fund it, VCs. Number 2, actually there's 4. Number 2, there is the people who start it, Sasha, the founders. Number 3, the people who build it, product engineering. Number 4, the people who sell it, sales and marketing. By the way, it's very clear what those 4 people do. If you actually just think, what does a VC do? What does it? And then there's the 4th. It's very clear to me what they are now. But at the time, it was finance, ops, strategy, biz ops, IT, legal, HR, cost centers, back office. I was told at an anonymous company, I'll leave a name, you don't have a CPA, so you don't qualify for finance. For all the CFOs out there, I think you'll really get a laugh at that one. The amount of how finance was understood and utilized. Translation, finance was deemed to be more of a compliance cost center must-have thing, not a strategic weapon. So what happened was I got lonely. I tried to join a bunch of CFO groups. To be quite frank, it didn't fit me. It felt very, lopsided, either too accounting based or, just, I don't know. It wasn't my thing. Then it was COO groups. And I was like, they don't really talk a lot of numbers, but they're, whatever. So what ended up happening, there's 9 people invited to a lunch group in April 2014. And I wrote down on a piece of paper the opposite of all these communities, what I didn't like. So the opposites are humility, generosity, relevance, no bullshit, and safe space. And I asked these 9 people, would you want to actually get together and just help each other? Because we are not understood or cared for in this world. So my career is going to be uphill. And they said, sure. That 9 has accidentally grown 98% organic. Not a single sales dollar, not a single marketing dollar, to 825. We are approaching our 10-year anniversary. We are not 1 chapter in San Francisco. We're 20, and London just opened up. So why did this grow? Anytime the universe pulls something to existence with 0 CAC, what is going on?
What is your product market fit, Casey?
Yep. I'm going to ask you a little quiz, because it took me 9.5 years to figure out why in the world this thing kept growing. Okay. 2 facts I'll give you about the Operators Guild. And for those in the audience, I'm curious if you'll guess this as we go along. Of the 800 people in the Operators Guild, there's 235 unique titles. That ratio of unique titles to people is 6 sigma of any community. Okay. That's number 1. Number 2, there's 4 title personas, if you looked at it. Number 1, finance. We're all director and above. CFO, VP finance. Okay. Number 2, COO ops. Customer ops, COO, whatever. Number 3, special ops. strategy, chief of staff, biz ops, rev ops, go-to-market ops. Translation, very small team or non-existent team, internal consulting. And number 4, early founders, general managers, CEOs. The question, what does a chief of staff, a CFO, a biz ops, a founder, a GM, head of customer ops have in common? Why in the world would they be part of a paid premium community? Meaning you got to choose to pay. You'll either churn off, you're not, have an NPS of 80, have a retention of 95%. Why in the world do they even get along? Any guess? It took me 9.5 years, so I'm not going to fault you if you don't get it.
They all have the common enemy of the founder.
Yes, no, founders are 15% of our group. We are specialists at being generalists. What I discovered, I am not a CFO. I'm a business builder who specializes in finance. This sounds cheesy. I borrow it from the military days. Navy SEALs are the generalists of the military. Well, why not use the Army or the big Navy or the Air Force to take care of it? Why in the world would you need to create this like orthogonal force called, funny enough, special operations? Because there are a ton of things that a generalist is needed. Okay. So the OG is literally the Navy SEALs of company building. It is the best of finance. It's the best of biz ops. It's the best of the founders. The future of operating is multidisciplined operators. And if you're a vertical, if you just want to do finance, no offense, just go in a CFO group. That's fine. But you don't really care for sitting in a go-to-market meeting or a product meeting. That's fine. But I think the future, as AI eats every vertical function from the bottom up, the more multi-disciplined you are, the better. So that's who we are. And it grows continuously because I think people are realizing I'm not a finance person. I'm not a biz ops person. I'm a badass company builder who happens to spike like a SEAL in sniping, radio comms, medic. But you don't call them a doctor. You call them a SEAL. You call them a business builder.
So OG starts not too dissimilar. You have a little scribble on a napkin. It turns into like a couple friends joining. It has product market fit. It hits growth. You 10x over the course of time. I have to imagine that with all of these people, there's some just incredible knowledge bombs. So can you tease us out with like, what are some surprises in or some advice on how operators can thrive in a transitioning role?
You're talking about a specific type of learning or just
what's the biggest surprise?
General?
Like you look back, what was the biggest surprise in starting OG?
Surprise was so many smart people were tricked into thinking they were in a boxer category. I'll take me as an example. Sorry, not I mean smart, but I'll take me as an example of like I'm paying attention and I'm a CFO, I'm a CFO, I'm a CFO, I'm a CFO. That makes kind of sense because the world tells you Sasha needs to hire a CFO. So what I'm saying is career-wise, there's a bunch of people who decided not to stay to become a McKinsey partner or a Wall Street billionaire. They decided to do this thing called building, but when they got here, they didn't even know how to sell themselves or what they do. That's one of the most common problem of OG is what do you do? Now, CFOs think there's finance. That's wrong answer if you say it. I'm a business partner, business builder, or what's strategic. It's very hard to describe what we do. We are specialists at being generalists. Try to describe that.
Well, I think what probably comes out of it is there's an analogy potentially with Y Combinator. Being a founder is also a fairly lonely job, and there's so many different potential things that come at you, and you have to figure out how to solve them. And so I imagine some of the benefits of OG are you just have it's getting an answer faster, or the community wisdom.
Bingo. When you think about the surface area permutations of a generalist, it's exponential more than potentially a sales group or an engineering group. Most surprising thing is it organically grew into this incredible diverse group. We have the Sashas of the group. We have CFO of Carta just joined. Like we have, when you ask a question, for example, comp philosophy. I'm going to bet if you ask it in a verticalized group, you will get a pretty tight standard deviation answer. Our group, founder comes and goes, it's all about culture. I said at 90% because I want a mercenary culture. Ooh, that's interesting. Finance, it's a control and scale. HR folks, no, it's to be able to outsource to managers a decision so it's not a bottleneck when you hire. It goes on and on. Our problem sets are not role-based. They're business-based.
Right.
So the OG GPT is my surprise. We accidentally created one of the most incredible, you ask a question, trained on 10,000 years of battling, of all sorts of PhDs, from every angle. That answer is so rich. That is the most surprise, but it can only be done by accidentally building a generalist group. No one in their right mind would start and say, I'm going to start a group of generalists. But it happened because the world actually operates that way. That's why we're together. And then strip all the titles. We're just badass business people that specialize in strategic finance, data analytics, business intelligence, org culture, board and fundraising, and influence. Those are our disciplines. We're skill-based, not role-based.
So there's so many different things. We'll get to the last couple questions because we're getting up on time. Out of OG comes FOG. You described FOG as 10,000 years of operating experience in a single check, which obviously sounds quite powerful. What is FOG, and what are some of the things you look for at FOG?
FOG is another accidental, you can call it product market fit, but FOG stands for For Operators Guild. It is the investing arm and syndicate of OG. It has about 1,200, now 1,300 members, CFOs of very, very renowned companies you probably have heard of that retired in investing, and then a lot of OG folks. Okay. Every single CEO and founder, I've realized after being sell side, buy side, corporate side, cares about three things. I don't care who you are, Jamie Dimon or whoever you are. Number one, money. Number two, customers. And number three, talent. Depending on at what stage, they'll care about certain things. So go down the list. Who takes care of money really well? VCs. They're incredibly good at it. 40 million check, wired, Monday, done, solved. Speed, efficient. God. Okay. Number 2 and 3 are by far the hardest. I don't care how much money you've raised. WeWork had to fight for every customer, how to hire every talent, just like everyone else. It is like equal playing field, kind of, right? Go. Product doesn't win, customers don't come. Customers are the ultimate difficult. All right. What is FOG? We're customers and talent. We have a super pitch that will bring over 50 to 100 of us. If you're selling B2B software, that's accidentally an 80-person 1 hour times 80 sales session. I asked your BD team, can you set that up in 3 days? The other is customer diligence. The ultimate diligence, in my opinion, having been a public equity investor, is all you do is ask the customer. All right, you want to pitch to me? You know what? Don't pitch to me. Pitch to the 4 CFOs. If that's a CFO product or a controller product or a go-to-market product, pitch to them. If they're confused and don't know what's going on and are not excited, we are not investing. And the opposite's true. If they're like, oh my God, this is a game changer, et cetera.
I can attest as a FOG portfolio company that I had trouble getting a hold of a public company CEO, and I had a meeting within 2 days based upon the FOG network. And then we had some information that we needed, something that felt really confusing about operation and biz ops, and sent an email and had 30 responses back. It was incredible. All right. So last question before we ask you how people can get a hold of you. You have now been a CFO or in finance in a lot of different situations, investment banking, hedge funds, scaling companies, other companies. You started up FOG. What is the number one piece of advice that you give to CFOs today that they just don't listen to that you wish they would?
Don't just be a CFO. I don't mean that in a derogatory way. I've seen so many amazing CFOs now that are on their 7th tour of duty as a CFO. That's great. Do an 8th. That's fine. What about being a CEO? What about being a founder? A lot of us deep inside want to be. We just don't admit it. I want to be a COO. Why? Just go, no 3.5 bedroom. Go Sasha style. Go full founder, baby. That's where you come in, by the way. You've been incredible to me. It's like, dude, just go for it. You know, like, because a lot of us are self-regulated. Like if you think about the personality of a CFO, we're very self-regulated. We don't try to get too crazy or visionary, which is great, counterbalance to visionaries. But that also gets in our way. The thing about OG is I'm going to tell everyone, the generalist superpower you have, you be a Navy SEAL, not a medic. You can go snipe. You can go, it depends on what you want to do. So your career horizon, and it should be 10x larger than what you think it is. That's what I want to tell the air quote CFOs out there. And there's nothing wrong with the CFO path. I think it's amazing, but you can do way more.
It's really good to sort of, I think one of the best parts about Silicon Valley is there's opportunities for everybody, and you build such incredible superpowers as a strategic CFO in being able to both tell the story, show the numbers, and you have this incredible superpower that most people don't have. I love it. Great. Casey, how do people find Operators Guild? How do they get a hold of you?
The website, it's operators-guild.com. I'm on LinkedIn. But yeah, I check all my emails and my LinkedIn. So feel free to reach out. It's also hello@operators-guild.com to answer any questions, or just ping me on LinkedIn.
Love it. Casey, thank you so much.
Thank you. And congrats on everything, Sasha.
Thanks for tuning in to Turpentine Finance. Share it with your executive team, direct reports, friends, and family. And if you want to support the show, the best ways are to leave a review wherever you're listening and subscribe. Turpentine Finance is part of Turpentine, the podcast network behind Moment of Zen, Turpentine VC, Age of Miracles, and more. Shows for experts by experts in tech.